Good afternoon, everyone. This is Joe Henches with Beyond the Chart. Today is Saturday, January 18th, 2014, and this is the technical analysis market update for the weekend. First, we're going to take a look at not Apple. Hate when I do that. We'll come back to Apple. We'll get to it at the very end. The first thing I want to look at is the Dow Industrials. Dow is up 41 points on Friday, and kind of continuing this little bit of this sideways action over the last 3 days. I'm continuing with these counts. This could be 1 and 2 of 3, or this could be 3 and 4. And I know years ago when I first started getting exposed to a lot of this, it'd be like, oh, okay, he's trying to cover his butt. He's trying to figure out, he doesn't want to be wrong. That's really not it at all. I mean, sometimes what you've got to do is you've got to sit back and say, it legitimately could be this, or it could be that. And it's the same thing as I mentioned before with chart formations, that type of thing. Sometimes you really don't know, or you think it's a symmetrical triangle, or you think it's a certain type of figure, and then all of a sudden it does something else, and then it totally disavows what you were looking at. So we're just trying to look at alternatives. Right now, if I had to guess, I think we're pushing forward. I think I mentioned that on Thursday. So we'll see. Now, I've got some concerns in here. And we can work it off, but I mean, we've got some divergence in here that, it just hasn't pushed high on the RSI. Let me take a look at the weekly Dow. This is where the divergence is really showing up, okay, over the last several weeks. Okay, so from this high here, what week is that? November 22nd. We've pushed higher on the Dow, but we didn't on the RSI. That's a negative. Okay, so and the same thing happened on the DI plus. We go to the S&P 500 on a daily basis. We've still got this divergence in here, and we're kind of sideways. Now the thing about it, sometimes sideways action will work off divergence, like over here. You had divergence showing up. You eventually got sideways to down. I guess this was more down than sideways, and then all of a sudden we broke on up out of it. Same thing could happen here. We're just going to have to watch to see, and you don't know till it shows itself. We look at the S&P on a weekly basis. You got the same thing. You're seeing the divergence showing up on the weekly basis, and that could develop into negative. I mean, the S&P it's down 4.7 points over the last 3 weeks. So from this close on December 27th, it's down 4.7 points. So it's just gone sideways, and the Dow is down 19.85 points. So it hasn't really done anything over the last 3 weeks. Okay, next one, the Nasdaq on the daily basis. Again, same thing. We're getting this divergence and negative divergence that's showing up. And so what you don't know is how much, when you get this divergence like in here, does this mean a pullback down to the 50-day moving average? Or is it going to go sideways and work it off? The weekly, same thing. So on all three of the averages, even though the Nasdaq has been so strong, we're getting this divergence showing up over a multi-week time period, kind of like back over here. I mean, I look back and you look at the tops up here. When was this? This was the beginning of 2011, which ended up starting to be a topping formation that then collapsed back in all that confrontation issue with the government in summer 2011. Nasdaq. Okay, let's take a look at the VIX. Where's the VIX? Sure, well, there it is. There it is. I was right on it. Okay, this really hasn't done. It's gone sideways, very low again, which is a sign that you're kind of up in that topping area. Short-term trading index, or trend, I call it. The 10-day exponential has been moving up slightly higher, not as high as it was here a few days ago. Gotten a couple high readings here. 3 out of the last 6 or 5, I guess. 3 out of the last 5 were up in this neighborhood. So not really giving us another signal, well, at least not yet, other than what I talked about when we got this polar extreme opposites at one time. The high-low index, though, is kind of interesting. You know, we're right here in the middle, been going sideways, but I noticed this, it looks like we're getting a divergence. I mean, we haven't moved to new highs here, and, you know, the Dow has since this October. Okay, so we're talking about this kind of time frame. The Dow has clearly trended higher, and when you look at the high-low, it hasn't moved to the new high. So all of this move in here did not push up here to the high end. So we'll see. We'll see if we can get to break this trend line or whether this divergence continues to hold. So that's just one more little question mark that's showing up. Okay, I want to take a look at the XLF real quick. If I can find it. You know, we needed to hold this trend line. It would be nice. It is trending up. It was down, you know, Friday, Thursday, Friday down. Take a look at the home builders. Home builders, this is not a good trend here for the home builders, but it could be nothing more than a reaction after this tremendous move here. Like to see it hold this trend line that it's been in since October. So that's what it be. That's the way they are looking. And then if we look at the semiconductors, you know, we had that big day on, what was that, Tuesday, and now we popped back down below that. Although it's, you know, it's still looking like the overall trend is up, so I'm not really seeing anything that is overly alarming there. So I think that's everything that we wanted to look at. I want to take a look at Apple now. That's the last thing today. This picture is the overall picture I'm seeing. This, I think, is the first move down off that major top, and then this is this wedge I've been talking about. Now, I'll be honest, this wedge is a little bit bigger than what you normally see with a wedge. I'm normally thinking a wedge might be like 3 months long, and this is like 5 months long. So, but, you know, we've had big moves that we're dealing with. I mean, this move here, well, I don't know what, it's from September down to April. So what is that? That's like 7 months long on that move. So the biggest thing for this week, though, with this formation, I'm still bearish on this until something else shows up. I'm calling this is the traditional kiss goodbye. Okay, you've broken this trend line right up like this, and you broke it here, and now you pulled back and you kissed the trend line goodbye, and you roll back over. And Friday, we're down 13.58 points, and it was the highest volume day of the last 17 days. Okay, so what's going to be real interesting to see is, do we take out this point? And, you know, this point and this point, these are like little markers. It's like you check them off if they start to go down, and then as it heads back down to this area. So we'll see if that's what we continue to get, but this looks like the classic kiss goodbye to the trend line, and then it rolls over. So that's my best assessment for now. Anyway, this has been Joe for Beyond the Chart, and we will talk to you tomorrow. Well, actually, we're not open on Monday for trading. It's Martin Luther King holiday on Monday, so I'm going to be watching football games tomorrow. We've got the championship games going on, and those look like two great games. So I may get the video out either tomorrow night on trade ideas, or it probably is going to be on Monday. So that's the way it looks at this point. Thanks for stopping by. We'll talk to you soon. Have a great weekend.